Nice, sir.
Nice or not, it will be known on Sunday evening.
Exactly.
No, it will be nice, sir. 100% nice, sir, this time. No doubt. Sir. It will be 100% nice.
Okay, hopefully, because in the
100%,
group messages, at least 200 people should always shout that yes, we have cleared BFM, we have cleared BFM. Then it will be a good thing. Okay, nice means that should be nice.
One time the fundamentals are not clear, sir. I have seen this one, sir.
Okay, you are appearing for the second time, na? Hello. This is your second time, na? Hello, can you hear me?
Yes, sir, audible.
Yes, sir.
Okay.
My confidence level is 99%. I will definitely clear.
Why not 100%?
So 1% is always down.
No. You see, always confidence. See, normally when you up your expectation, na, then only say achievement will be little bit lesser. So up it for 120%, so that you land up at 100%. If you make it 99, means you are going down by say 10 or 15. So 85 or 80 thing will come. So always make it. Yeah, confidence. Z score. That is the Z score. Na?
Okay,
probability.
Sir. Thank you, sir.
Z score. Okay, 99.99% is also not 100%. Okay. Anyway.
Right, sir.
Okay, good. It's 1% of VAR, sir. Okay, so Sivalingam is telling. Okay, fine. So we'll start with the balance sheet management. Same 2 hours time is there. So let's see. So this is the first question. Very simple questions. First we'll do. The total liabilities of this bank is given as this much, 5,37,865 crores. Based on the information given, answer question 1 to 4. So what are the things given? Your liabilities and other things are given. Capital reserve, current deposit, interest accrued, savings deposit, time deposit of banks, time deposit from public, overseas borrowing, then normal borrowings, refinance from NABARD, bills payable, suspense account, credit balance. These are the things given. So we'll see what the questions ask. Question is asking, what is the quantum of liability that will not qualify for being the part of NDTL or DTL for CRR calculation? So out of this, which are the liabilities, they are not part of the CRR and SLR calculation? Can anybody say, just tell me which are the things which you remember?
Capital.
NABARD, sir. NABARD.
Capital resource.
Capital reserves.
Term deposits from public. Refinance from NABARD.
Suspense account credit balance.
From banks. Term deposit from banks.
Capital reserve, term deposit from
Banks.
banks and
Refinance from NABARD.
Account credit balance.
no, so credit balance, suspense account credit balance will not is not there. See, these 4 will be not considered. So basically these are the things: capital reserve, time deposit from banks, and refinance from NABARD. These 4 are the things. So you add all these things, how much it is coming, that will be the answer. 3585, 8960, 15600, and 1670.
29815.
So 29815. Somebody else confirm this is the correct now?
Yes, sir.
Yes, sir.
So this is the amount of liabilities which are not to be considered for CRR calculation. Very simple. Okay. So this type of question will come. So only remember, capital reserve, time deposit from banks, and refinance from an NABARD or RBI for any refinance is coming, that will not be considered. Okay. What is the amount of NDTL on which CRR to be calculated then? So you don't have
Total
to.
liability minus this one, sir.
Yes, you don't have to add up because total liabilities has been given here. 537.8. This minus this. So how much it will be coming? 0, 5
508050.
5 8 0 508050. Okay. So this is the amount of NDTL on which CRR to be calculated. Okay. Next is, if the prescribed CRR rate is 4%, then what is the amount of average balance to be maintained by the bank with RBI?
So 4% of 508050.
So how much it is?
20322.
20322.
So this will be the daily average balance. Okay, this is the daily average balance to be maintained. If they ask what is the fortnightly product balance, then
Into
Multiplied
14.
14.
into 14 days, because for CRR it will be taken as fortnight is taken as 14 days, not 15 days. Okay, fortnight is always 15 days, not 14, not for 15 days, it is 15 days. Okay. What would be the minimum balance in CRR account to be maintained with the RBI when the CRR rate is 4.5% with stipulation that minimum requirement is 90% of the average fortnightly balance? Again, a very easy question. So you have to find out what is the 4.5%. So 4.5% of 508050.
20576.
20576.
576.
This is the answer or this is the 4.5%?
Answer.
This is the, so this is the 90%.
Yes.
Okay, 90% of X. So what was the X amount was coming?
22862.
22862. So 22862 is the average daily balance, where RBI has told that minimum you can reduce up to 90%. So any day you can maintain 20,576, but the total 14 days balance should be 22,862 into 14. Okay. So total product balance for.
So second question, 1 second, sir.
Second question is, see, first question we have arrived at that this is the liabilities which are not to be taken into consideration for CRR balance. So second question is asking what is the NDTL to be taken into consideration for CRR. That means here in the question total liabilities has been given. So total liabilities minus this means all which we have not taken here. So 1, 2, see this 1650, 220, 320, 800, 293, 600, 184, 800 all together. If you add, it will come 50,8050.
Fourth
okay,
question.
so that fourth question is if the CRR to be maintained is at 4.5%, then what is the daily balance? So 50,8050 into 4.5% comes to 22,862. That is the average daily balance. But RBI has told that you can maintain 90% on any of the day. So what will be the average that minimum balance? Minimum balance will be 90% of 22,862. That comes to 20,576. So any day you can maintain to 20,576. But for 14 days, the balance would be 22,862 into 14, whatever the amount is coming. So other days you have to carry more than this 22,862 thousand balance. It's clear?
Yes, sir.
Deposit with banks also excluded from NDTL calculation.
Deposit from?
Term deposits of banks.
Yeah, because they are term deposit which is received. This bank is received some term deposit from other banks. So that will be not taken into consideration. Okay. So any liability from the banking system will not be considered for CRR or SLR calculation. So this is the liability from banking system. That's why public you have to consider, but banking system, if any fixed deposit is there, that will not be considered. Okay, we are done with these 4 questions. There is no problem.
That's a third question.
Third question. Third question, simple. This is the eligible NDTL on which CRR to be calculated. So third question is telling if CRR rate is 4%, what is the amount? So this multiplied by 4%. This multiplied by 4% equal to 20,322. This is the average daily balance to be maintained by the bank. Okay.
Sir, why it is multiplied by 14?
Multiply by 14. I have just given example that
Okay,
this is the daily balance. For a fortnight, you have to maintain 14 days this balance.
Okay, sir.
Each day you have to maintain 20,322 for 14 days. So for 14 days, product will be 20,322 into 14. Okay, clear?
Sir, what is the term used for, you use for 14 days?
14 days means?
20322 into 14.
Fortnightly.
Fortnightly product basis balance.
Okay, product
Product basis means 14 days product. What is the 1 day product is this? 14 days product, how much? Multiplied by 14.
So answer will be the multiplied with the 14 days, sir.
Answer. So this question answer is only 20,322. 3.
Okay.
I have given example. When I am explaining, you just have attention so that what I am telling you should understand. Your attention, if is somewhere else, then again I have to repeat that. Please be focused on these things, okay? Because there is no time. Only 1 day is left. Focus, concentrated on everything. Very easy thing. These are simple calculation. There is no complication here. Okay. So I'm going to next question. As per RBI guidelines on asset liability management, capital, read the question very carefully. Capital and reserves are to be placed in over 5-year bucket. So capital reserves should be placed over 5-year bucket. Savings and current account deposits to be classified under volatile and core portion, where 10% of savings deposit and 15% of current deposits are generally withdrawable on demand, and this portion is to be treated under volatile. Okay, while the volatile portion can be placed under the 14 days bracket, the core portion may be kept under 1 year, 1 to 3 years bucket. The fixed deposits would be put under their respective maturity bucket, whatever the maturity is given.
Cheated the chair.
Please.
Mute, please.
If you don't, if you are not asking any question, please, if you mute, then it will be very nice. That the bank's liabilities are as under. So based on this, answer 5 to 9. Okay, so these are the things given: capital reserve, current deposit, savings deposit, FD under 1 month, FD 1 month to less than 6 months, 6 months to 1 year. Like this, it has been given. FD more than 5 years. All things. Now, question simple, very simple question, logical question. Just read the question properly, whatever is given in the top, and answer. So, what is the amount of current deposit that can be put under 14 days bucket? Very simple. You try it, then I will explain.
140, no, sir?
150, sir. 150.
150.
Very good.
150.
Because 14 days period, it is volatile person. Volatile person for current deposit is 15%. 15% of current deposit 1,000. So 15% equal to 150. So 150 is the answer for this one. Okay.
Sir,
so current deposit
will be taken also.
What is the question? Question number 5. What is the question? You read out.
Yes, sir. Current deposits.
It is asking only current deposit. We'll go to next question where your answer, your question, your thing will be solved. What is the amount of SB deposit that can be put under 14 days?
400, sir.
400.
400.
Very good. So that is 400. 10% of 4,000. So this is 400. Clear? What is the total amount of current and SB deposit that can be put under 1 to 3 years bucket? Very simple.
4450. 5,000.
Total is 5,000 is
4450.
total minus 550.
4450.
4550, right?
50.
Or sorry,
4450.
4450. So 4450 is the amount of current and savings account which will be put under 1 to 3 years bucket. Find out the amount of deposits that can be put under various bucket up to less than 12 months. Up to less than 12 months, which are the deposit to be classified.
Sorry, sir. So sorry, sir. 4,450, how it came, sir?
5,000 is the total for savings and current. 1,004 and 550 we have calculated here. This total of 400 plus 150. This to be put under 14 days. So rest amount will be 1 to 3 years. So 5,000 minus 550 is equal to 4450.
But sir, one thing.
Hmm.
Here it is stated that the volatile portion is kept for 14 is in the 14 days bucket, and the core portion will be kept under 1 to 3 year bucket. So the core portion is 4,000 minus 400 and 1,000 minus 150 now.
Okay, you do it that way. You do it that way, whether it will come same or not.
Okay, sir.
Sir, in this question we are neglecting this 15 to 28 days and other buckets. Only 1 to 14 and 1 year to 3 years we are considering.
Why you are ignoring?
In class, you said that there are 15 to 28 days time bucket. What about that?
If RBI tells that this has to be put, then what about 15 to 28? RBI tells that this is the RBI guidelines. There is only 2 bifurcation. So 15 to 29, then 32 there. What you will put? Is there something to put there? RBI tells only savings and current account to be put under 2 buckets. One is up to 14 days. Another is 1 to 3 years. That's all.
Depending on question, we have to consider.
Not
depending on question, we have
not depending.
Okay, for savings.
This
savings
is RBI guidelines. This is RBI guidelines. This is RBI guidelines which has been given as here. Question read the question as per RBI guidelines. It has been written. So RBI says that savings and current should be put in 2 buckets only. One is up to 14 days bucket. Second one is 1 to 3 year bucket. That's all. There is no third bucket is there. Volatile means it is withdrawable. So you put it on 14 days bucket, 1 to 14 days bucket. That's all. Within the 14 days bucket. Rest amount, normally they are not withdrawn. So they are supposed to stay in the bank for more than 1 year. So that's why those are put under 1 to 3 year bucket. That is the logic. Okay.
Sir, if suppose this percentage has not been given in the question, means can we take the volatile portion as 25%?
It will be, you cannot take, what is the RBI guideline? It will be given. RBI guideline till now, they have not changed. This is 10%, 15% is there. It will be given in the question. If that is not given, the question will be not asked about this thing.
Okay, in a book, a generally study like 25% of the deposits are generally withdrawable on demand, like that.
Sure, that was the old thing. So that's why those print, they have not edited. Current guidelines is this much on 10%. If they give, they will say that assume that the 20% of savings deposit and 20% current deposits to be put under 14 days. Then you work out in that way. Whatever is given that way. Okay.
Okay, sir. Okay.
Whatever percentage given, you follow that rule only. Because without percentage, the question will not be asked. Clear?
Okay, sir. Thank you.
Last question. Find out the amount of deposit that can be put under various bucket up to less than 12 months.
2400.
2950.
2450.
2950.
2950. 2950. So which are the deposit? So basically up to less than 12 months deposit will be savings and CD we have calculated for 14 days period. That is how much we have? 550, right? 550. Then FD 400. 400.
800.
Then this 800. Then
1200.
12.
1200.
This 4, I think. Huh? So total of this 5. So 2950. Very good. So 2950 is the amount of deposit which should be kept within this 12 months bucket. What is the total amount of liabilities with maturity above 3 years bucket?
What about 4450?
What 4450? 4450 what?
Total for 12 months 7400. In that we have to subtract 4450.
No, I could not get. Which question you are asking?
8th question.
8th question, up to 12 months. Up to 12 months. Up to 12 months, which are the things coming? 440, 4450 is up to 12 months or over 12 months? You are still confused. Why you are not answering? 4450, what we have got in the earlier question, whether that pertains to below 1 year or above 1 year.
Above 1, sir. Above 1.
Above 1 year, sir.
Above 1 year.
That is for 1 year.
The person who has asked, I am asking the person who has asked about. So now do this. What is the total amount of liability with maturity above 3 years? Okay.
6,800.
19980. 19980, sir.
19980 and somebody says 6,000 something, which are to be placed above 3 years bucket. See, 3 years bucket
Capital reserves.
6,800 capital and reserve. These are to be kept under 3 years bucket. So how much it is?
5 years.
12 plus 6, 18, 890. So 19,980. So 19,980 is the correct answer. Okay?
Yes,
sir.
sir.
First
one, sir. Please explain, sir. First question.
Which? First question.
Fifth one, sir. Fifth one.
Sir, in capital and reserves, they will be kept only for 1 year only, no, sir. Why we are keeping in 3 years bucket?
You read the question. Question. You have read the question. You have read the question. Have you read the question? What is the first line?
5-year bucket.
Reserves to be placed in for 5-year bucket.
So.
Okay, sir.
Sir, in question asking about.
You are not reading the question. So somewhere else your mind is there. That's why. Simple, very simple logic. You have to apply what is the question is given. Now, somebody was asking some question.
Fifth one, sir. Fifth one, sir.
If they have not mentioned about capital and reserves, where we should keep means we should use means we should take it for 5 years bucket only.
If they will not give that, the question will not be there. Why you are asking all these questions? If they will not give this, what will be? It will not be there. If the question is given, then on that basis the question will be asked. Why your confusion is coming? Question will be asked after everything is given clearly, still you are making mistake. That means you are not reading the questions. Somebody now, I have explained all the 9th. Somebody is now asking, explain question 5 again. This is waste of time. When I am explaining, you are not focusing on this. So amount of current deposit that can be put under 14 days bucket. So what is the question says in how much of the current deposit should be put under 14 days bucket of current deposit? The person who has asked me to explain on question number 5. Can you read the question and tell me how much of the current deposit to be put under 14 days bucket?
10% of SP, 15% of current deposit.
So 50. So this is asking out current deposit. So 15%. So what is the current deposit as per given in the table?
1,000.
1,000 is given. 1,000 is given. So 15% of 1,000 is how much?
150.
150. This is 150. Clear now? You can do the 6th question also. Okay. Now I'm going to the next one. This bank has following asset and liability as on 31st March 2017. Answer the question from 10 to 13. Okay. So here, this is asset and liabilities are given. So total 4 lakh, the balance sheet says 4 lakh. So let's see what the question asks. What is the quantum of rate sensitive liabilities? So you add those liabilities which are rate sensitive in RSA. What is the amount of RSA?
2,52,000.
2 lakh?
52,000.
2,52,000. Okay.
So
Anybody else?
2,52,000.
savings on fixed rate.
Sir,
Was
it's
it?
RSL, no, sir, not RSL. It's RSL.
Oh, sorry. RSL. Okay. RSL. Sorry, RSL, not RSA. Rate sensitive liability. So which are rate sensitive
2,40,000.
liability?
2,40,000.
2,40,000. So
2,52,000. 2,52,000.
Okay, 2 persons have 2,52,000. One is 240.
2,52,000.
2,52,000.
sir.
So savings deposit is 1 RSL, fixed deposit is 1, and borrowing is 1. So 120 is 240 plus 12 is 252. So 252 is the correct answer because borrowing also interest is there. Na? Liabilities you are paying savings interest, you are paying fixed deposit interest. Also you have borrowed from RBI, you have to pay the interest. So these 3 are rate sensitive liability. So 3 together 2,52,000. You cannot leave this borrowing. 240 comes only savings fixed, but borrowing is also part of this interest payment is to be done. Okay. The next one is what is the amount of rate sensitive assets? RSA.
3,60,000.
3 lakh?
60,000.
Okay, 2 persons have told this. I think it will be correct. So cash in hand is not there. Money at cert notice will come. Investment will come. Cash credit will come, and term loan will come. Fixed asset will not come. So cash in hand and fixed asset will not come. So rest amount will be 360. RSA will be.
Sir, investments is not
RSA.
if we invest in a company, like if I invest in capital market, that is not bound by rates, no sir.
Your bank is allowed to invest in the capital market? What is the bank investments? Where bank invests?
Government securities.
Government securities and all this.
Basically, for calculation of, so basically to maintain SLR, you have to make investment. Other than that, wherever your investment is made, definitely some part of interest is coming for investments. So investment earns money. Investment always. So lending and investments are done for the earning of the bank. Always remember. So
not necessary through the interest rate, no sir.
That from bond, what will coupon rate you will get? You name it otherwise, but earning is there. Na?
I invest in a subsidiary company of the bank.
Which bank invests that? You tell me. Subsidiary company, if you invest, so that will be part of this investment or somewhere it will be placed.
Investments in subsidiaries and associates.
So that will be separate. This is not the investment which is earning assets. Okay.
What is money at short notice, sir? Money at short notice?
Call money.
No, call money is 1 day. Money at short notice up to
notice money, term money.
2 to 14 days is short notice.
Okay.
What is the gap in the rate sensitive assets and liability?
108,000.
1,08,000.
1,08,000. 8,000.
Yes.
1,08,000.
360 minus 52.
Oh, okay. Is it the correct answer?
Yes, sir.
Yes,
no, this is not the correct answer. You are missing something. The numbers is correct, but you are missing something.
148.
No. 10800 is correct, but you are
Negative.
Minus.
How it is minus?
No, assets are more.
RSA is 360, RSL is
Sir,
252. The difference is
assets are more,
208.
sir. Positive only.
Positive gap.
So you have to tell positive 1086000. Okay. Option will be given in that way. Positive, negative, like that will be. So you have to pick positive only. It is not negative. It is positive because RSA is more than RSL. So always the answer is positive 10800. Don't forget about that. Okay, this is a positive gap. Positive gap of 1,08,000. Now 13th question.
So one doubt, sir. Sir, can you please just tell about what are the influence, what will be the after effects of RSA greater than, let us positive gap and negative gap?
After effect means whenever RSA
is more than
RSL greater than or equal to RSL, then it is a positive gap.
It means the assets are more.
RSA is more than or equal to RSL means what? If it is 100, RSL is 100, then it is a positive gap. RSA is 100 and RSL is 90, it is a positive gap.
Suppose if RSL is greater and RSA is lesser.
RSL is more.
More.
Well, negative gap. When RSL is more than RSA, then that is a negative gap. Simple. Positive gap and negative gap. That's all. So I have told you RSA, when RSA is more than or equal to RSL, it is a positive gap. Whenever the RSA is less than RSL, it is a negative gap. Or RSL is more than RSA, it is negative gap. There is no third thing, positive or negative gap. That's all. Clear?
Yes.
Now do this 13. If 60% amount in the head of capital is allocated for tier 2 capital, then what is the amount of tier 1 capital? From this table only.
1,600.
600.
How much?
1,600.
Tier 2 capital cannot be more than tier 1 capital.
2,400.
2,400. Okay, I am writing. What will be your questions?
11,200.
11,000?
200, sir.
11,200. Okay.
$25,600.
25,600. Okay. Any other? So many answers are coming. At least one answer out of this one is correct.
24,000.
2,400 is the correct answer.
2,400 is correct. Okay. So sure about it. Okay, fine. Correct answer is 25,600 is the correct answer. We have told this 25,600. That is the correct answer. Because say out of this 4,000, 60% is for tier 2. Means 40%. So 40% is for tier 1. So we have 1,600 from this capital head. 1,600 is there for tier 1, and free reserve also comes under tier 1. So add these two, it will be 25,600. Okay.
Tier 1 should be 50, at least 50%, no?
Tier 1? No.
No, tier 2.
Nothing like that. See, in Basel through, nothing like that. Basel through, simple thing. Tier 1 is 7%, tier 2 is 2%. So there is no question of 50-50. Earlier in Basel 2, that was there, where tier 2 cannot exceed tier 1. So that is always there, but in such case, 7%, 2%, in no way tier 2 will exceed tier 1. Tier 2 cannot exceed tier 1. In Basel 2 and Basel 1, it was possible. Okay.
So free reserves
the
will
answer?
not come in tier 2. So we are taking.
What is the answer for 13?
What is the answer?
Okay, I have calculated every.
25,600.
25,600.
See, here
Free
again, I am
reserves.
explaining. When I am explaining, you are not focusing. Here, simple 60% of the amount in the head capital is allocated to tier 2. Question is asking what is the tier 1. So from this 4,000, 40% is to be going to tier 1. So 40% of 4,000 is 1,600. And free reserve is also tier 1. So you have to add 24,000 also. So this comes to 25,600. So tier 1 capital as per this balance sheet with this bank is 25,600. Clear, or once again I have to explain?
Clear, sir. Clear, sir.
Clear, sir.
If you concentrate on when I'm explaining, then there will be no problem at all. But you are not considering.
Clear, sir. Clear, sir.
Okay. Next one you see. This bank has got some funds which has to be deployed. So how these are deployed?
Sir, please show previous slide, sir. 1 minute.
Sir, please mute all, sir, please.
Ma'am, if you are muted, then how will you ask the question?
Okay, thank you, sir. Thank you, sir.
This bank has raised funds by way of 91 days fixed deposit at 6%. So 91 days fixed deposit this bank has got. Now the bank has the following option to invest or deploy the funds. So 3 options are there. 3 options can be done by this bank from this fund which has been received by this bank. Can you please mute? Somebody's music is coming from our background. Please mute. Okay. So that fund is to be deployed in the 3 different ways. 1, 2, 3. So these are the options given. Now, according to that, what are the questions asked? 14th is asking if the bank makes an investment in 91 days treasury bills, and during the 91 days period, there is an increase of rate of interest by 1%. Then what will be the change in the net interest income on reinvestment after 91 days?
One % will gain, sir.
Negative.
We will gain by 1%.
Just by thinking you are answering, so that's why it is not to be true, might not be correct.
It will be same, sir.
Decrease 1%.
See, there will be 3 options: either increase
2%.
or remain same or decrease.
No change.
So you are jumping into conclusion without calculating. So what is the existing cost of deposit? Existing cost of deposit is 6%. Okay, and it is to be deployed in say 91 days treasury bill. 91 treasury bill is 8%. So you are earning 8%. At present, this is a 6% you are paying to the depositor, 8% you are earning. So net is our 2%. Our NII is 2% here. Okay, difference amount. Now what has happened? There is an increase of rate of interest by 1%. So this has increased to 7%. This has increased to 9%. So net effect will be
2.
Same.
No change.
There will be no change. So therefore, there would be no change in the NII. That is the answer. No change in NII. Okay. So you have to do this, then only you can find out whether there will be a change or not. Simple thing calculation. Okay. Now, next question. If the bank invests.
Sir, is it that the 6% fixed deposit has increased by 1%? It's only said that a treasury bill has increased the rate of.
No. Where it is written? There is an increase of rate of interest means both side increase. This interest rate has increased 1%. That means it has, if that is so, it will say that only treasury bill interest has gone up. That is not mentioned here. It is mentioned that rate of interest has been increased by 1%. It means both side the interest has gone up. Now do the 15th. If the bank invests the funds in 91 days floating loan with monthly repricing, then there is a rise in the interest rate in the investment made, what would be the impact on the NII?
NII will increase. NII will increase.
Why?
3 resets are there for that one. Monthly repricing, right? 3 resets are there. So loan will be increasing 8, 9, and 10 like that. But our deposit is fixed for 91 days. So it will be at 6% reset only. Spread will be increasing.
Okay, fine, good. So due to this monthly repricing thing, you have to take into consideration. So in that case, deposit rate stays same, while this floating rate of this loan interest rate rises. So that's why our NII will rise. Here NII will go up. Okay. Next, if the bank invests in the funds in 91 days.
Sir, can you repeat 15th one, sir, please? The answer I'm not able to understand.
Sir, we are not able to understand. The madam is speaking very speedily. Sir, please explain, sir.
I want to understand question about 15 once again, sir.
Say fixed deposit rate of interest remains same. It does not change because that is fixed. Fixed deposit, it remains for same. It is, there is no change in that. But in the 91 days investment, it is said that it is changing. Changing means it is increasing. There is a rise in interest rate. So when this remains at 6%, but this goes up 8%, 8.5 or 9 like that, that means what? NII will be increasing or decreasing?
Increasing.
So that is the thing here. Here the question is that, so NII will increase because there is a repricing of this floating loan, maybe every fortnight or every month, whatever it may be. So during that period, when the repricing takes place, means 8% is going up. So 8 to 8.25 or 8.5, like that, it is going up. So that means what? Every time it is going up. So definitely, since the FD rate interest is fixed, it is not moving anyway. When the asset side interest is increasing, that means NII is going up. NII will rise. Okay?
Thank you, sir.
If the bank invests in 91 days loan with monthly pay and there is a fall in the interest, what would be the impact? Same thing. FD remains at 6%, but this 8% loan is decreasing. So in that case, what will be? This will be reverse of this one. So the NII will decrease. Here it was increasing. Here it was same. Now it is decreasing. Okay. If the bank chooses to invest the fund in a 3-year term loan, what will be impact on the NII? Can you read the question?
Sir, we have, sir, in 16th question, we have to take only this one, no, sir, floating rate loan in investment, sir. FD is the same. There is no change at all. But
yes,
we have to
that
take
is
only one parameter, no, sir?
Yes, only one parameter. Here, this 91 days floating loan monthly pay, and there is fall in interest of this only. Because we are not speaking about the FD. FD remains same. FD, there is nothing, sir. Okay. You are confusing with 14, question number 14, because there is a interest rate change, interest by 1%. So you are thinking that it was treasury. No, this was for both the things. Okay. So what about this question 17? If the fund is invested in a 3-year term loan, what would be the impact of NII when there is an increase in the rate of interest?
Remains
Decrease.
NII decrease.
NII will
Increase in the
decrease.
rate of it.
No change, sir.
Till 91 days, it will
change.
be increasing. But
Funding
after
risk.
91 days, NII will shrink.
The same amount
Funding
goes
risk.
to term loan.
Till the term of the deposit, the NII will be increasing only. But once 91 days is over, or deposit will be resetted with each 91 days. So NII will be shrinking after that.
So answer will be NII will fall. Fall. It will fall, na? Yes or no? Here, see, if there is an increase rate of interest, bank could be liability sensitive because change in interest and deposit will take place here. Here again, so your confusion is there. Here you think about that. Here the increase in the rate of interest is happening. 3-year term loan. Term loan is what here is given through a 3-year term loan at 8%, means this is fixed. This rate is not changing. This is not a floating loan. Floating loan means it is changing. Here term loan is not changing. It is fixed rate of interest. But rate of interest changing, increasing means where it is increasing. Increasing in the FD. FD it is increasing. Term loan it is fixed interest rate. So when FD interest is increasing, that means our NII will drop. Clear or not?
Sir, here they are asking only about the term loan, no, sir. How we will assume add to FD also?
See, here 3 options are given. According to this option, it is given. So when 3-year term loan is given, here 3-year term loan, here rate of interest is given as 8%. Means it is 8% for 3-year term. Here, that's why here floating rate is given. So when the floating rate is given, means this interest is changeable. Here nothing is given, means this is a fixed interest. Term loan fixed interest. Otherwise, it should have been given 3-year term loan with floating rate of interest 8% at quarterly interval or half-yearly interval. So here term loan interest is fixed and FD interest is increasing. So in that case, our payout will be more. So when payout is more, our NII will decrease, right?
Sir, so in the
Yes, sir.
like that, if in the 14th question, treasury bills also it's not written floating, no? Like, but we consider it as it is increasing.
Treasury bill means up to 91 days, it is 8%. It remains. And after that also, since it is not floating, it is not written. But here the question is given, there is an increase of rate interest by 1%. Means both sides it is increasing. Okay. So your confusion is that why it is not given. So question will be, say, I can change the question. There is an increase of rate of interest by 1% on the both sides. Just right here on the both sides. Means on the liability as well as asset side. Now it will be clear to understand.
Sir.
Okay. Now do the next question. If the bank chooses to invest the fund in a 3-year term loan, what would be the impact on NII if there is a fall in the rate of interest? Simply, so it will be increasing. Just reverse of this one. Here it was going down. Here it will be increasing. So this type of simple questions will be asked where you have to be very careful enough to answer. Otherwise, due to reading in the question, understanding and interpreting in a wrong way, you will check the wrong option. Okay.
Sir, last question, the increasing the NII, no, sir?
Yeah, this is just reverse of this one. Here is same thing. Term loan interest is not changing, but FD interest is changing. FD interest is coming down. Means what? If FD interest we are paying less, means our NII has to go up.
Sir, FD actually it is fixed, no?
For up to 91 days, sir?
Up to 91 days it is fixed. After that it is changing. Na? It is saying that. So bank has taken the deposit for 91 days. After that, the thing, whatever the question is that, after that period, what is happening? Whether interest is going up or going down, those are the questions given. Up to 91 days period, the thing is that you have taken at 6% and you are investing at this. After 91 days period, the changes are happening. Now, these are the things given in the capital reserves, current account, everything is given. Again, same type of thing. So we have to answer. What is the total demand liabilities of the bank? Demand liabilities. Which are the demand liabilities? Somebody answer. Which are the demand liabilities?
Current deposit.
Okay. Current deposits.
Savings score.
Savings deposit. Savings score.
Okay.
SB
Savings.
beyond core.
Demand draft.
Okay.
Demand draft.
Demand draft.
Unclaimed deposit.
Unclaimed deposit.
Unclaimed deposit. Unclaimed dividend.
Unclaimed deposits.
Unclaimed dividends.
Same dividend.
Dividends. Unclaimed dividends.
Same deposit held with SBI 14 days maturity.
The public.
See
No,
here,
it is
demand
not.
liabilities. Demand liabilities.
Fixed deposit public.
Demand liabilities. Fixed
SB
deposit is a
beyond
demand
core.
liability.
Suspense
Time
account.
liability. Time liability.
Borrowings from PNB, sir.
Suspense account, sir. Suspense account.
Margin for LC.
Other liability, I think.
Margin LC.
Yeah.
Sir, SB beyond core, sir.
Margin LC here it is given as FD.
Sir, SB beyond care.
So that's
So
all. Sir.
only
Will borrowing from RBI come, sir?
how the demand liability. Borrowing from RBI will not come into picture.
The certificate of deposit is a demand liability, sir. CD.
Certificate deposit, how it will come?
Actually, you have marked in that certificate of deposit only as sir.
See, only these four will come. Only these four will come. Current deposit, savings score, unclaimed, and demand draft. Savings
Sir,
beyond
what about
core?
SB beyond core? SB beyond core.
Because these are as per RBI, these are to be kept under 1 to 3 year bucket.
Okay, sir. Okay.
So that's why it is not a demand liability. So that's why this confusion will be given. SB beyond core and SB core will be given. Okay.
What is SB beyond core, sir?
No, see, actually, beyond core has to be taken. Core should not be taken. Beyond core is volatile.
Yes, yes.
This is the volatile. This is core means this is 1 to 3 year. So your answer will be CD, your unclaimed deposit, demand draft, and savings deposit. These four will be coming into picture. Okay. CD, your current plus savings volatile plus unclaimed deposit plus demand draft. These four will come as total demand liability. What is the total term liabilities? Term liability will become as your FD
Sir,
public.
Beyond core means volatile. Can you explain that like savings core and saving beyond core difference, sir? Actually, what is core and
you strike out this one, savings volatile, you write. Okay. Now you understood savings volatile and savings core. We have done one problem. Na? Volatile means which are withdrawable, that should be kept under 1 to 14 days. Which are not withdrawable, they are called core. They should be played in 1 to 3 years.
Okay, sir.
So term liability, total term liability should be FD. FD from public is there. FD is there. FD from public plus margin of LC in FD. So what this FD? Then savings beyond this savings score
16458.
These three will be coming as your total term liabilities. what is the total other time and demand liabilities? Other time and demand liabilities. So
Interest
here,
accrued on bills payable.
very good. So interest accrued
Sir, not clear,
plus
sir. Please. Question again, sir.
interest
term
accrued on
deposit
bills
with
payable,
SBI.
Unclaimed dividends.
Sir,
unclaimed
why,
dividend,
Suspense.
and suspense
Suspense.
account. And these three will be coming under other time and demand liability.
Term
Okay?
deposit with SBI, that will come
Sir,
under
what
term
about borrowings from PNB?
Borrowings from PNB.
so total term liabilities in the sense. Why were not term deposits included in the total term liabilities, like term deposits held with SBI or fixed deposit public?
Term deposits held with SBI 3253. What is the total?
14 days maturity. Why was it not included in the term liabilities, sir?
Term deposit held with SBI.
Yes.
Held with SBI means
That is our
term
assets.
deposit. You have made term deposit with SBI, so it will
Investment.
be not your liability, na? You have made.
Okay,
This is term deposit from SBI means it will take. This is held with SBI.
Okay, sir. And what about the fixed deposit public, sir?
That we have taken na in this total term liabilities. Fixed deposit public we have taken na.
Okay, sir.
Borrowings from PNB.
Sir, please once more, sir. This one, sir.
Which items we have taken, sir, in time and demand liabilities, unclaimed dividends and?
See, these three are coming under other time and demand liabilities. Interest accrued on bills payable, unclaimed dividend, and suspense account. These three will come under this other time and demand liability. Next question is, what is the total assets held by your bank? So total asset is, what is the asset here?
3253. Term deposit held with SBI.
Oh, only this is the asset. So this is the asset. 23253 is the only asset. As per this information, only asset this one. Okay. Next question.
Borrowing from PNB. Why is borrowing from PNB is not taken into the liability? Sir, borrowing from PNB, 91 days maturity. Why it is not taken in the liability, sir?
Total liability.
Yes, sir.
Total, which so normally term liabilities of your bank means which are the term liability taken. Which are the taken? We have taken this term liability as which are the fixed deposits.
Fixed deposit public, margin against LCFD, and savings bank core.
Savings bank core we have taken. That is a pure term liabilities. Okay. So these are borrowings are not taken to consideration. Borrowings are not taken into consideration because in that case, question will be asked, what are the term liabilities including borrowings? Then you to take those borrowings.
Okay, sir.
Okay.
Right. Okay, sir.
Then what is the qualified DTL on which your bank has to maintain CRR? So basically, what is the demand liabilities you have calculated in question number 19, and what is the term liability, demand liability and term liability you have taken in, and plus other demand liabilities and other time liabilities. Three together, whatever the things are coming, this total will be the DTL which will be taken into consideration for CRR. Okay. And if the average daily balance 95% level to be maintained for CRR of 3%, then whatever the total is coming here, X into 3%, then multiplied by 95% you make, that will be the, basically these are calculated for, we are taking into consideration this demand liability, term liability, everything for CRR calculation. So in the beginning I have not told, for that reason these borrowings are not taken into place. Otherwise, if that is not the case, as somebody asked why it is not taken, in that case we have to take these term liabilities adding this borrowing from RBI and borrowing from PNB, this has to be added in the term liabilities. But for CRR calculation, these borrowings are not taken into consideration.
Sir, total assets held by your bank. Question 22.
This is the only asset we are having.
Only one. Okay. Sir.
Only. There is no other asset. Everything is liability except this term deposit we are making with other State Bank of India. So that is a asset item. Now, this is the question you have to be careful about this. The following table represents the inflow and outflows, and total inflow is given, total outflow is given here. So this is the structural liability statement. So you have to structural liquidity statement. You have to see and what are the question is asked. Okay. Question is asked, among the given information in the table, positive liquidity gap are observed in how many time buckets? So first you have to find the gaps. What is the gaps coming? Gap is difference of inflow and outflow. So here the gap is first one. Gap is
6, sir.
How much is the gap?
Minus 150.
Minus 150.
Minus 150.
Minus 150. Second one it is
Minus 150.
minus
Plus
150. Here
Plus 100.
Plus
plus 100. Here
Minus 50.
Minus 50.
Here
Zero.
0. Here
Plus 50.
Plus 50.
plus 50. Here
Minus 50.
minus 50. Here
Minus 150.
Minus 150.
here
Minus 50.
minus 50. Here
Plus
Minus
450.
plus 450.
plus 450. Okay. So these are the
Zero.
gap. These are the gap. Okay. So among the given information, how many positive gaps are there? So positive gaps are 1,
3.
5.
2,
3.
so this will be 4. 4. Because 0 is to be taken as positive gap. So don't forget that. Okay. So if you mark 3, this will be, so I told you now, whenever RSA is greater than or equal to RSL, that is positive gap. So 0 is positive gap. So there are 4 positive gaps. Okay. Now we have to find the cumulative gap also. Let us find the cumulative gap for at least all the things so that next question will be here. So cumulative gap, this is 150. This will be
Minus 300.
This will be minus 200. This will be minus
Minus
250.
250. Minus
250.
250.
Minus
200. Minus
150.
250.
Minus 250.
Minus
Minus 400.
Minus
Minus 450.
0.
Okay. Now next question. In which time bucket there is a maximum liquidity tolerance level breach as prescribed by RBI? So basically RBI prescribes for these 4 buckets. In which bucket the tolerance level is maximum, which has been breached by maximum? So you know that for first bucket, what is the rate prescribed by RBI?
Minus 5.
5, 10, 15.
5 minus 10, 15, 20.
Okay, very good. So now you have to calculate which bucket actually have breached the maximum.
First one is
First one,
21
how much?
point.
21 point.
What is the percentages, sir?
Here it is written 5, 10, 15, 20. Maximum this much is allowed. Beyond that, that is breaching. So first one, how much it is? So it will be cumulative gap to the total outflow. Total outflow is 700. So how much it is? 700, 150 means what is the percentage coming here?
27.2.
27.2.
21.42. 21.42, sir.
20?
1.42.
21.42 is the first one. Second one?
46.
300. How much?
46.15.
36.15.
46.1.
46.15. Okay. Next, third one. 200, 550.
36.36.
36.36. Okay. The fourth one.
How are we finding the percentages?
23.80.
23.80,
sir.
80. Okay. So now this is 21.42. Allowed is 5. So minus 16 point something it is coming. Here allowed is 10. So 36 is here coming. Here allowed is 15. So here is 21. Here allowed is 20. So it is 3. So which is the maximum? Maximum is this one. This one is the 2 to 7 days bucket.
Sir, how did you get the 21.42?
This is, see, what is the cumulative gap percentage of total outflow? Total outflow, what is the percentage? In 700, 150. So what is the percentage? 700, it is 150. So 150 divided by 700 into 100. Are you getting 21.42 or not?
Yes, sir.
So always that prescription is the cumulative gaps, percentage of cumulative gap to the total outflow should not exceed 5% for the first bucket, 10% for the second bucket, 3% for 15% for third bucket, and 20% for the fourth bucket. So always remember, cumulative gap to total cash outflow.
So this 5, 10, 15, 20
that
percentage is
300.
Yeah, what is your question?
So this 5, 10 and 15, 20 percentage you have written now, sir. That is always constant, like.
This
Yeah,
is
that
the
is the
RBI,
prescribed by
this is the
RBI.
RBI prescribed. This is right now 5, 10, 15, 20. This is the allowed. RBI has told that this much is allowed till now. It has not changed.
But in the book, it is not there, sir. Macmillan book, it is not there.
Okay, I'm telling you, you remember for the exam. After that,
It
you
is
forget.
there
Don't
in
worry.
Macmillan.
It can't be in the Macmillan book.
No, they have given only the buckets, sir. They have not given what is the percentage of tolerance level.
Definitely, there has to be there. It has been given somewhere. If it is not there also, it might be something else which has been changed. So RBI prescription is this one. This is the RBI prescription till now also. You remember this 5, 10, 15, 20. You cannot forget this one. This is the prescription. Okay.
Sir, in 20 question, do we take 0 as a positive gap? There is only 3 positive cases. 0 also do we take as a positive gap?
That's what I told, na. That's why I have taken it 4, na.
4, how we got? In third bucket, difference is plus 100. Then 3 months.
This is first. This is first. This is second. This is third, and this is fourth.
4. Okay.
Gap, only gap is telling, not cumulative gap. It is positive liquidity gap. Okay, cumulative gap is something else. Gap is only difference between outflow and inflow.
Sir, I meant not cumulative buckets, cumulative gap, only positive liquidity gap. Question number 24.
That is that fourth.
If the answer is 0, then we can take it as positive liquidity gap. 0 also we can take it.
That's what I have told now. 3 times I have told now, and earlier also I have told that RSA is equal to or more than RSL. It is a positive gap.
Okay.
Here it is equal, na? RSA is equal to RSL or not? Equal. 1111 is equal or not? That's why difference is 0. 0 is also taken as positive.
Sir, while calculating tolerance level, we should not consider minus plus, sir. There is no use of positive gap, negative like minus.
This is minus only, na. Here these are minus, na. Cumulative gaps are minus, na. That's why you are taking. Where there is a plus.
You're calculating, na, sir. Percentages. 21.42, 46.15. So these are there, na.
See here, because these are negative, then only we are calculating how much it is excessive. If it is positive, we should not calculate for that thing. When it is cumulative gap is positive, we should not, because positive means there is no way to, it has not breached at all. Positive means that since these are all four are negative, all cumulative gaps are negative. So negative cumulative gap should not exceed this percentage from the total cash outflow. That is the guideline. Now you understood? Clear? Is it clear?
Yes, sir. Sir, what about 29 days to 3 months percentage, sir? That 5%, 10%, 15%, 20% you have given now. What about for remaining buckets? No need to calculate for remaining buckets.
How many times I have told you, RBI has given only for these four. Then what will be taken for these things?
Okay,
RBI
sir.
is concerned. See, in the theory class also I have told, RBI is concerned about short-term liquidity. Short-term liquidity means up to 1 month only RBI is concerned. So that's why these four buckets only RBI has given prescription. If other things were given, I should have written here.
Okay, sir. Thank you.
Only these four. You forget about other things. Only these four is concerned. You should concern about this. This should not breach 5, 10, 15, 20. There is no question of 3 year, 5 year, 1 year, nothing. Only short-term liquidity.
Okay, sir.
Sir,
Can we
if
go to
we will ignore that one, sir. If these four, if any value will be positive, we will ignore. The rest will be do no, sir.
Cumulative gap should be positive. If the cumulative gap is positive, because it is on the cumulative gap. If any of the cumulative gap is positive, see here the question is, RBI is asking that your cumulative negative gap should not exceed this one. When positive gap is there, why should you say, when the RBI is telling your cumulative negative gap, when RBI is telling about negative gap, so when positive gap is there, you should not worry about these things. Nah? Because there is a liquidity problem. Negative means you are short of fund. That's why RBI is telling your shortfall of funds should not exceed by 5% of the total cash outflow. So you have to take care of this shortfall. Immediately you have to manage that one. That is the problem. This is the liquidity crisis. So when there is a positive, means you are full with the liquidity. So there is no point in calculating this thing.
Okay.
Is it clear or not? Because you don't have money, then only you have to calculate that shortfall or something. This liquidity problem, tolerance level means how much maximum tolerance can you go. So it is 700 is outflow. 700 5% means how much? 5% of 700 is 3. How much?
35.
35. 35. Only 35 you are allowed to go as minus here. But here it is 150. That means 115 is the amount which is excess. You have gone, tolerance level has been breached. That's why you are calculating. If it is positive, there is no point in calculating this, na? Because RBI is asked about negative cumulative gap. Is it clear?
Sir, clear, sir. But these four, we will get any two will be positive. Those are ignored. The rest of will be taken now, sir.
I have told you negative gap, negative cumulative gap. That means what? If 4 are positive, then what will do? Can you calculate for anything? No need, na? Simple thing, negative cumulative gap. When the prescription is for negative cumulative gap, why you are confusing about the positive thing? Positive things we should not take into account. We have to just leave it because we are not having liquidity problem.
Sir. Okay.
But sir, one doubt is in question number 25, we calculated the maximum liquidity tolerance level. All the four values are negative values. So from that four values, we have to select the maximum value, right?
The 4 value we have got, whatever the value. Suppose this was say 21, this was say 36, this was say 40, and this was say 30. Suppose this is the excess we have. But RBI has allowed here 5 here, 10 here, 15 here, and 20 here. So this much is allowed. So what is the excess? Excess will be 21 minus 5. So our excess is 16. Here also, what is the excess you calculate? And the question is asking, out of these 4, which is the maximum? Is it clear or not?
That is the doubt, sir, because all when we calculated all the four values are negative. So for negative values, that means I think it is minus 21, minus 36, and we selected minus 36. But for negative values, minus 3 is the highest value. That's why I'm asking.
Anybody who has calculated first one, what is the negative? What is the breach value? Anybody calculated? Just tell me.
21.42.
21.42.
Oh, what is the second one?
6.15, sir.
Pardon? 36 point?
46.15, sir.
46.15. Okay. Third one?
36.43, sir.
36.36.
36. Okay. Oh, my pen is not working properly. Okay. Next one?
23.80, sir.
Okay, 23. So 23. So now here 21, 46, 36, and 23. These four has come. Now RBI has allowed 5 here. So what is the excess now? We are excess by 16 here. RBI has allowed 10 here. What is the excess? 36. Here excess is 36. RBI has 15 here. So means 21. Here 20 means here 3 only excess. So out of these 4, which one is the maximum? Maximum is this one or not?
Second bucket.
Is it clear?
Okay, sir.
Whoever
Clear,
asked the
sir.
question?
Clear,
Clear,
sir.
na?
Clear.
Okay, sir.
Thank you.
Simple arithmetic.
So the answer is second bucket, sir.
Answer will be that 2 to 7 days bucket.
Thank you, sir. Okay.
Okay, next one. Calculate the excess liquidity mismatch percentage over and above the tolerance limit of RBI under the 8 to 14 days bucket. Already you have calculated this one. What is the thing? Excess was say 31.36 or something.
36 something.
36.43.
36.43, sir.
36.43 minus
15.
15. What? So 21 point or whatever thing is coming. So 21.36 or whatever it is coming, that will be the answer. Okay.
Okay, sir.
In which time bucket that liquidity gap is 0? That also we have calculated. This is the liquidity bucket where it is 0, because here 11 says so. This is the 29-day to 3 months bucket. In which bucket the cumulative liquidity gap is 0? That also we have calculated.
Last bucket.
Last one. Here. So over 5 years, this is 0. Maximum negative cumulative gap is observed under which time bucket? If you have written all the things.
2 to 7 days.
No. I don't think so.
Sir, minus 400 was there.
I think in the 3 to 5 year, 3 year to 5 year bucket. Here the minus 450 was here, and that's why it is 0. Here also plus 450. Here minus 450. That's why it is 0. So this was the maximum minus 450. So this 3 year to 5 year bucket where 3 to 5 year the maximum negative. Maximum negative is observed. That is already repeated. This is repeated. Okay. So these are the questions. You have to just read it and you have to do it. Any confusion still now?
No, sir, in 28.
28. Which time bucket cumulative liquidity gap is 0? Cumulative liquidity gap 0 was here only. Because here it was minus 450, here plus 450. So it is 0. Cumulative gap was 0. Here cumulative 450, here 450 plus. So gap was 450. So cumulative gap was 0 in the 5 to more than 5 year bucket. We have calculated in the last slide. Huh?
Yes, sir. Thank you, sir.
Okay. Now next one. A pre-shipment advance account has become doubtful above 1 year but less than 3 years. So above 1 year, below 3 years, DF doubtful 2. Okay. So doubtful 2 has outstanding debit balance of 40 lakh. So 40 lakh is the outstanding. Principal value of security available is 15 lakh. This is the security available. And ECC cover is available at 60%. 60% ECC cover is available. What will be the provision required as on today's date?
$10 lakhs.
How will do it?
9 lakhs, sir.
9 lakh. Okay, let's see. Somebody has answered 9 lakh. Okay. You do it. Somebody else do it.
Minus 40 lakh minus 50 lakhs, 25 lakhs and 25 lakhs.
28 lakhs, sir.
28 lakh. Okay. 4 lakh. Somebody is telling. I'm writing the answer.
10 lakhs.
10 lakhs. Okay.
16 lakhs, sir. 16 lakhs.
34.8. So 34.6 lakh.
34.6 lakh. Okay. Okay. I'll do it. I'll do it. Whoever answered this 16 lakh is correct. Okay. So simple thing. 40 lakh is outstanding. 50 lakh is security. So 25 lakh is unsecured. After reducing the security, 25 lakh becomes unsecured. And ECC cover will be given on the unsecured part. Because secured part they will not give. So 60% of 20 lakh is how much? 25 lakh of 16% is 15 lakh.
16.
So 15 lakh is the ECC cover on which no provision is required. Okay. Now, so 10 lakh will be the unsecured for which provision is required. So unsecured provision will be 100% and secured is 15 lakh. So 15 lakh will be secured, which is 40%. So 100% means 10 lakh. 15 lakh into 40% is 6 lakh. So total provision is 16 lakh. So those people who have answered 16 lakh, for them it is correct. How you have arrived at 9 lakh, 28 lakh, 4 lakh?
Sir, once
always. What once again? I am not singing a song. After singing a song, when it is popular, normally people tell, please sing the song again, once more. See, outstanding balance was 40 lakh. Okay. Security available is 15 lakh. So, if you minus that one, so 25 lakh becomes our unsecured amount. Because ACC will give the claim on the unsecured amount only. Because 40 lakh it will not give, because 15 lakh already you are having. So 25 lakh they will give the claim. So 25 lakh 60% will be given as a claim. So 25 lakh 60% is how much? 25 lakh 60% is 15 lakh.
15 lakh.
15 lakh. So 15 lakh no provision to be made. Any claim, any coverage of ECC, DICC, whatever is there, government claim is there, on that provision is not to be made. So from unsecured of 25 lakh, we have to less this 15 lakh, which is ECC claim to be received. So what is the remaining? 10 lakh. So 10 lakh is the unsecured amount and 15 lakh is the secured amount. 15 lakh is the secured amount. So unsecured amount, doubtful to, it will be 100% provision. Secured amount, it is 40%. So 10 lakh, 100% become 10 lakh. 15 lakh, 40% becomes 6 lakhs. Together, provision will be 16 lakh.
Sir, calculation is understood, but the date to be found is a future date. So, is it correct, sir?
No, it is not correct. See, date is not a matter here. So basically, it is to be asked on the, suppose this is today is 31st March 2022. Normally on the date, what is the provision to be made for that? Okay.
So for ECG, we cover the 60% is constant, or they will give in the question, sir?
A question will give it. It may vary. Some 75%.
You can give any percentage.
Normally it varies from 60 to 75. Maximum is 75. See, in
they
foreign
will assume it as 60.
No. They will be giving it. They will be giving it. It will be given in the question. You cannot assume anything. It will be given in the question. Don't assume. Because coverage will be given. What amount of the coverage is? It will be given.
Here, sir, here 15 lakh, sir said no provision is required. It is the secured portion. Then how we get the 40% of 15 lakh? How we can take?
I will break my head. I will break my head. Out, see, 40 lakh was the outstanding.
You have to.
15 lakh was the secured person. Okay. Now, unsecured is how much?
25 lakh.
25 lakh. And 60% will be given by ECGC. So 60% of 25 lakh is how much?
15
Again,
lakh.
it is 15 lakh. So don't confuse with this 15 lakh, this 15 lakh. So this 15 lakh is not to be taken. So you have to minus this 15 from this 15 you minus. No, not this 15. Okay. This 15 you minus from this. So 10 lakh. So this becomes our unsecured. This remains as secured. Now it is clear?
Sir, clear.
This bank has this information. So total advance is given, substandard, DF1, DF2. So what is the amount of provision required for substandard asset? Calculate and tell me. First.
900.
1525.
900.
500.
540. 540, sir.
540, sir.
540.
540.
540, sir. 540, sir.
540. How 900 came? How 900? Say substandard.
Security available 3600.
Value of security, that is secure. Secured person is 3,600. Fully secured. Fully secured means 15% provision. So 3,600, 15% becomes 540. Na? Okay. So where 900 came, how this 900 came? Okay, what is the...
Sir, for unsecured 25 or we have to take 15 only, sir, for unsecured.
What is the unsecured here? What is the amount of unsecurity? Unsecured amount here? What is unsecured amount?
Sir, it is not given here in the exam.
Not given, now you have to calculate.
Zero.
Can you calculate from this here? What is the unsecured amount?
0.
What? 0. So 0 into 28% is equal to 0, na?
Sir, as per RBI circular, they say if it is up to 6 months, you should not provide 25%. This is the circular.
Which circular it is said?
RBI circular. Up to 6 months and 6 months to 1 year they have given in one chart.
So where you have read that? Where you have read?
RBI site only, sir.
RBI site?
One is applied in this exam, sir. What we have to follow in this exam? 15 only, no, sir?
That thing, whatever you are telling 6 months, 12 months, that is not there. Simple substandard asset, you remember, if the security available is more than 10%, only that 15% will come into picture. I have
Sir, it is for not reporting for the fraud. I say that is something 1 month to 6 months, 6 months to 12 months.
That is different.
Fraud.
Previously, we have made a mistake in this calculation, like substandard calculation.
Yeah, last examination.
Yes, sir. Yes, sir.
There was a question like that where most of the
So we
people
have
have made a. Yeah, some of the people they have given answer. So normally, whenever so here in case of substandard, we'll always remember unsecured part will be considered when the value of security is less than 10% of the outstanding balance. For doubtful and other doubtful, it is not to be considered that way. Only for substandard. So that 25% unsecured will come into picture when the value of security is less than 10%. Okay.
It is more than 10% only.
Only 15%. Till see, suppose 100 is the outstanding balance and security available is 9, then only that 25% will come into picture. If security available is 50, then also only 15% will come into picture. Means only secured part 100 into 15% you have to take into consideration. Okay. So now calculate what is the
substandard assets ECCC not taken, no, sir?
Where from in the ECCC, where it is written in this question?
Sir,
No, sir. Just I'm asking.
Sir, in Macmillan book, unsecured exposures will attract a 10% additional provision is written.
So that is 15 and 25. That is 15 and additionally is 10 means 25. 15 is for secured person, additional 10% for unsecured person. Then again in the book, what is unsecured for substandard, they have explained. You read that, then it will be clear to you. Okay.
Means it is directly on outstanding 15%, 25%, directly on outstanding.
What is your question? Directly means what?
And on means here 3,600 on 15% on like that 3,600.
Yes. See,
Okay.
I have given you example. 100 and security available is 90. What will be the provision here?
15%, sir.
15% of what?
100.
3,000.
15% of 100. So it will be 15. Here provision will 15. Suppose 100 is the outstanding balance and say 9 is the unsecured part. What will be the provision here?
25%, sir.
What
25%
25%?
of 9, 80.
100, sir. 100, 25%, 100.
Plus 91.
What is
here? 9 is secured, sir.
9 is secured.
15% of 9 plus 25% of 91 plus 25% of
15 and 91 into 25. Okay.
Sir, what about the infrastructure
Sir?
project? Escrow account is available when escrow account is available.
For that 10%, that such a question will not be there. I have given that table. Whatever the percentage is given, you write that. That is 10%. That what is the percentage given for that infrastructure thing? What is the percentage given?
20%.
15%.
15 or 20?
20%.
Secured 15, sir. Unsecured 20.
So in that case, 15 and 20 will be taken into consideration. Now calculate this provision for doubtful assets.
2120.
1760.
2120.
2120.
600 crores, sir.
Huh?
600.
1760.
2120.
20, sir.
1760.
2120.
Here 1600 into 25% plus 200 into 100%. So how much it is? 1600 into 25% plus 200 into 100. 200 plus 4. So 600 here comes. Here 800 into 40% means 320 plus 400 into 100 means 720 here.
720.
Here it is 800. So total is 202120 is the correct answer. I am not using calculator, but I can do it here. So you cannot make somebody told 17 something. How it is 17? Simple thing. Here secured, unsecured will be in that way, not as substandard. Okay. Now, what is the amount of total provision for NPA?
2660.
Two?
Add both of them.
2860.
2860.
Don't forget to take this loss asset. Loss asset has to be added. So 2860. Okay. So now find out what is the gross NPA percentage.
11.09.
11.05.
11.05. Okay. 09 somebody told na? I think 09. 09 is the correct, I think. 11.09. I am getting 11. Okay. Net NPA percentage.
0.92.
Pardon?
6.92. How do we find gross NPA percentage?
Gross NPA percentage is equal to gross NPA
2.35,
divided
sir.
by total advance into 100. Net NPA, tell me.
2.35.
0.92.
No.
Provisions.
No.
Provision.
2.35, sir.
Calculate, sir.
No. You are forgetting net NPA percentage formula. You are mistaking again.
4.17.
Net NPA by advances into 100.
4.17.
Net NPA percentage is equal to
Net NPA by net advance.
first find out what is the net NPA, then find out what is the net advance.
Gross NPA minus provision of NPA.
Okay. What is the net advance then coming? Net advance is 68,470 minus 2,860 is the provision. So 65,610 will be the net advance. This will be divided by net NPA. Net NPA will be gross NPA. How much? Gross NPA is the total of this one. Total of this one is 7,600 minus 2,860 equal to 4,740. So this multiplied by 100. This will be the net NPA percentage. 4,740 divided by 65,610 into 100. How much it is coming?
Sir, net advance, how we get?
Net advance is equal to total advance minus total provision for NPA. 7 point?
Okay.
7 point something. 72 no. 7 point something.
7.22, sir.
7.22. 72 cannot be. Net NPA cannot be that much. Okay. Clear? Now find what is the provision coverage ratio.
4.1, sir. 4.1.
Provision coverage ratio. How
It should be more than 70. Around 70.
Total provision.
Provision coverage ratio. What is the amount of provision to gross NPA? So 2860, 7600. So here 2860 divided by 760 into 100.
37.63.
So 37.63 will be PCR. So PCR is according to RBI specification, or it is more or less?
More.
Less. It should be 70.
70%.
It should be 70%.
It should be minimum 70%. Okay, 70% or more. So here it is less.
So
Any doubt on this?
7,600. So 7,600, sir.
So this is total NPA. These are the total NPA.
33%.
Which question? 33.
33, sir.
What is the problem?
It is 25, 40, 100, no, sir?
Yes, 25. DF1 2500, DF2 4000, DF3 is 100. This is secured, this is unsecured. Here secured is 1600 is secured, unsecured is 200. 800 is secured means 400 is unsecured. Here total is 800 you take. 600, 100 means total 800 you take. So this is the unsecured amount. This is secured amount. You calculate, that will be whatever you have got, 2120 or something we have got. 2120 or something we got here. Clear? Can I move to next question?
Yes, okay, sir.
Yes, sir.
Yes, sir. BFM Company Limited enjoys CC limit and term loan facility with your bank. Please mute your mic, please. Term loan having outstanding balance of 105.48 lakh as on this. On the same day, okay, on 31st 12, CC account having balance of 82.2 lakh has turned NPA. Okay. So this was term loan, and on the same day, CC account has turned NPA. Total amount of security available to your bank against the exposure is 260 lakh. Your bank has subscribed to the bonds issued by this company amounting 1.35 crores. There is no default in payment of interest and installment in the term loan account or bond subscribed by you. What is the amount you should classify as NPA and the amount of provision required to be made? Okay, now you tell me.
Total amount.
Term loan,
sir, 447.68, sir.
1 minute. I'll just write out then. CC is 8220 and bond is 1.35 crores. Okay. So this is 1.35 crores. These are in lakhs. Okay. And security available is 260 lakh. So first tell me, what will be the classification of NPA?
One account NPA, all account NPA.
Borrower wise.
Okay, but which, okay, that is fine. So classification of NPA is borrower wise, means if one account is NPA means all three will be taken into account as NPA. Okay. Now, NPA means whether it is a substandard or doubtful one or doubtful two or
Doubtful two. Doubtful two.
Doubtful two.
Substandard, sir. Substandard.
Means it is substandard.
31st 12 2019 12.
Doubtful one, sir.
Doubtful
D1.
So till 30th 12 2020 it will remain as substandard. After that another 1 year. So 31st 12 2021 it will be in the doubtful one category. We are here asking for March 21. So up to December 21 doubtful one. So this will be a doubtful one category. Not
in
doubtful
2019 it has turned as NPA, na, sir?
31st 12 2019. Na, date is given, na?
Sir.
So 1 year it will be a substandard, na?
Right.
Till
Sir.
1 year period
Yes,
substandard,
okay.
na? 12 months. 12 months means 31st March 2020. After that, it will stay for another 1 year.
Up to 30th, up to 30th, it will be DF1, na, sir?
Up to 30th of December 2020, it is substandard.
Sir.
Okay.
Sir.
Next, how much is a DF1 stays for how many years?
1 year.
12.
1 year.
1 year.
Sir.
So 1 year is 31st 12 2021 or not?
No, sir. 30th. Is it not?
Okay, 30th. Okay, 30th. I agree. 30th. 30th 12 to so 31st March is falling under this or beyond this?
31st will fall next category, na, sir? DF.
It is in DF.
Period.
First March.
Right. Okay.
This is December 21. This is March 21.
Right.
How
sir,
it will go?
Okay.
So DF1 means what is the provision rate? 25%.
100 and 100.
Okay. Now you calculate.
40, sir.
Sir, it will not be substandard, sir.
Here I am writing doubtful one. Why substandard is coming to you?
No, they are asking as on 31/3/2021, what is the NPA status, sir?
I have clarified here, na?
Because it is becoming in December only DF1.
Where becoming DF1?
What is the amount?
It has turned NPA. Turned NPA means what? What is the first stage of NPA?
The total provision 127.68.
Standard.
127.68.
Please mute all.
So what is the total coming here?
127.68 for provision.
Okay, 127.
27.68.
Okay, fine. So total of this, how much it is coming?
322.68, sir.
322.68 is the total outstanding, out of which 260 is our secured. So unsecured will be
62.68.
62. So this will attract 25. This is 260 will attract 25%. This will attract 100%. So you calculate, you will get 127.68.
Sir, how did you get 322, sir?
How did I get 322?
Adding all.
These are lakh, this is crore. You convert it to lakh only. So that's why I say this type of tricky question will be given when you add this one. If you take it as a lakh, then it will be a mistake. 1.35 crores has been given. So you have to convert it to lakh. If you convert it to lakh, simply it becomes 135 lakh. So now you add, you will get this 322.68. This is 68, here 322. Okay. 1.35 crore means 135 lakhs. So normally in the examination, you make mistake by just adding 1.35. Yeah, so ask me.
Sir, what is the amount you should classify as NPA and amount provision to be made on 31 March? From 30th December 2020 to 31st March, it will be substandard only, no, sir?
Here I have given here, I have explanation why you are, when I am explaining here, simple thing I have explained. This is the date of NPA. For 1 year, it will be in the substandard category. So 1 year expires on 30th of December 2020.
It is not as per financial year. That is.
Now also you are confused as the financial year. It is on the date of NPA.
That is date of
date of NPA. From date of NPA, this NPA thing comes under date of NPA. Financial year, you will be totally doomed in the examination. Don't confuse that. It is from the date of NPA, the substandard for 1 year, doubtful 1 for another 1 year, doubtful 2 for another 2 years, doubtful 3 above that. Okay. Is it clear now?
Yes, sir.
Yes, sir. Yes, sir.
Today you are having say 90% doubt. Tomorrow, day after tomorrow is the examination. Bank wise maturity. How many minutes are there?
Day after tomorrow.
10 minutes. Okay. Yeah, day after tomorrow is the examination. So
sir, that 90% doubt has been clarified today, na, sir. So
very good. Okay. Okay. So last minute, you are only last minute only. When the house is on the fire, then only we get up and you take a bucket of water, then you will douse the fire. That is the thing. Last moment, fire at the last moment when everything comes to your bed only, when the bed is burning, then only you will call the fire brigade.
No, ABM also was like that only, sir.
Okay, very good, very good.
ABM was like this only. All tables were there.
There is an advantage. The more you attempt, more you appear for CAIIB, more intelligent you will become. So don't worry about that. Number of times you appear CAIIB, more intelligent. So bank will have bigger asset because every time you read, you acquire more knowledge.
But no more increments.
Thank you, sir.
Say increment is, those are not things. See, when you become knowledgeable, so people will know you. Increment, you are not telling your people how much increment you are getting. But when knowledge is there, everybody is going to recognize you. So bank-wise, okay, bank-wise maturity profile is given this one. Okay, so these are the investment portfolio by public sector bank, old private banks, new private banks, and foreign banks. Okay, so these are the investments time-wise. Up to 1 year, 1 year to 3 years, 3 years to 5 years, 5 years to above 5 years. Okay. Now answer the question. Please mute your mic then. Okay, first question. If there is a decrease in the average yield of 0.75% for the investment up to 1 year maturity, in which bank group will lose the maximum?
New private bank.
New private bank?
New private bank will lose more.
Okay, because the bank which has got more volume of investment in that 1 year maturity category, that will be there. So 1 year, which are the thing up to 1 year? So 13, 14, 53, 45. So new private bank has got maximum exposure. So if the interest yield is coming down by this one, so this bank's loss will be more. Okay. If there is a decrease in the average yield at 0.65% for the investment for over 5 years maturity, which bank will lose the minimum?
New private bank.
New private bank.
New private.
So again, new private bank, because this is over 5 year, minimum is of this bank only. So they will be losing the less amount. Assume that most of the investments are done in the government bonds, whereas investment in shares and debentures are very negligible. If there is an increase in market rate of interest of 1.5%, then the highest diminution means depreciation, in the value of investment will be faced by which group of banks in the investment portfolio of over 5 year category? Means suppose all these things are invested in government bond, very less investment in share debenture, and it is telling that there is an increase in the market rate interest by 1.5%.
All private banks.
Then which bank will be?
Old generation private banks.
All private banks.
Basically, when this is the correct answer, because when the rate of interest is increasing, that means the portfolio value, the market value will be going down. Rate of interest goes up in the bond means value will come down. So maximum the bank which is having, they will have the maximum diminution. So old private bank has got 64 year. So 64, they will face the maximum depreciation or diminution of the value of investment. Clear? These are very simple 1 mark question. Now read the question and answer. An export finance made by surrender turned NPA on this date with outstanding loan amount of 146 lakh. So 146 lakh is the outstanding. Collateral security available is 66 lakh. This is the security available. The loan has ECC cover and the bank has received 102.20 lakh as the ECGC claim. ECGC claim it has received. Okay. On 3rd June 2021, part of collateral was sold and the sale proceeds of 39 lakh was adjusted to the loan account. That means 39 lakh has been adjusted here. So 13 lakh credited means our outstanding balance will come down by how much? 107. 107. Okay, 107. So outstanding balance has become 107. So security was 66 lakh, out of which 39 lakh we have sold. So whatever the rest amount security remains is
27 lakh.
27 lakh. So this is the current position. Okay. Till now it is understood.
Sir, repeat sir.
No, sir.
146 lakh was the outstanding. 66 lakh was the security available. Okay. Out of this security, 39 lakh was sold. And this 39 lakh was credited to loan account. So 39 lakh of security was sold means we have left with security of 27 now. Earlier 66 was there. We have sold 39. So now security available is 27. And this 39 was credited to the loan account. So loan balance has come down to 107. Clear now?
Yes, sir.
Yes.
There is no confusion.
Yes,
If you
sir.
ask,
Yes, sir.
okay.
Clear, sir, clear.
Now, ECC claim has been received by the bank at 102.20. Okay. So this is the amount which has been received by the bank. Already received before adjustment of this account. So this was not adjusted. So this was received on April 21. This was adjusted in June. So this amount we have received prior to adjustment. That means we have received excess amount of ECC claim. Okay. Is it clear? Yes, sir. So now you have to find what is the percentage of ECC claim we have received.
$70.
70%.
70.
Okay.
70.
Okay. So 70% is the claim ECC is given. So 70% they have given on say 146. But now since I have adjusted this 39, we are supposed to get on 107 only. Right? So what is the amount will be there?
74.9.
74.9 is the eligible amount of ECC claim should be there. So rest amount we have to refund it to, it will be refunded. 74.90 is the eligible amount for which
32.10.
there is no provision. So there is no provision required for 74.90. How much we are going to refund to ECC, that doesn't matter. Okay. Now, what is the secured amount? What is the unsecured amount? You tell me now.
Sir, how is 74.9, sir?
Secured 27 lakh.
Can I explain the ECC?
Secured sir 27.
Unsecured.
Unsecured 5.10.
Unsecured is
5.1.
5.10.
5.10. So what is the provision required? This is 40% and this is 100%, right? So 27, 40% is how much?
70%.
10.80, 5.10. So it is 15.90 lakh. Okay.
Sir, how 74.90 UCGC provision, sir?
Provisioning 40 or Julia.
You have understood this?
Yes, sir.
70% you have understood, na?
Yes, sir.
Can you tell that once more, that 70%?
70% you have received on this 146 balance, right? Yes or no?
Yes, sir.
Then what actually we have adjusted the 39, so outstanding balance has come down to 107. So we should get 70% of 107. So that is the amount 74.90. Because you have adjusted the collateral, na? So that amount has to be returned to ECGC. Only this is the eligible amount. 100 to 20 you have received, which is excess, because 39 you have adjusted the collateral. So that amount becomes, our outstanding become 107. So on this amount, if 70% is calculated, it becomes 74.90, on which no provision to be made. Okay.
Sir, once again, please explain, sir. ECGC return amount 39 lakhs. How it will be adjusted?
Sir, actually 146 is total loss, sir. I mean, second portion we need to reduce.
Yeah, 146,
Yes,
sir.
sir.
66
One-
unsecured.
146 minus 66 will have to do, na?
80 lakhs.
100 to
Actually,
0 divided
I'll
by
do,
80 lakhs.
I'll do the correct thing. What you have done all things. That's why 146 was the balance.
Yes, sir. Outstanding.
Earlier balance. 66 was the 66 was the security.
Security.
Right.
So unsecured is how much?
80 lakhs.
80 lakhs, sir.
80 lakhs.
80 lakhs. So on 80 lakhs, unsecured 80 lakhs means normally 80 lakhs claim cannot be 100 to 20. Okay.
Okay. Okay. Sir.
So in that case, we have to presume that they have given this claim on this 146.
Okay, sir. 146, 70% is 1 lakh 2.20.
So you have to find out what is. So in 146, we have got 102.20. So what is the percentage? 102, this into 100.
70%.
70%. Okay. This is the eligibility. ACC will give 70%. But
Yes,
after adjustment of security of 39, our balance of outstanding has become 107. So we will get 70% of 107. That becomes 74.90. Now it is clear?
Okay, sir.
This is the last question. I think time is not there. So now this is the question where this is a mixture question of balance sheet management and risk management.
So what is the final answer of previous question, sir?
Final answer?
Final answer.
Answer was I think 15.90. 5.10 and 10 something else. So 15.10.
5.10, how it comes, sir?
I'm checking the question. How we make.
So please, 27 lakh is the remaining.
Please mute.
Please mute.
107 was the outstanding balance. Yes or no?
Yes, sir.
Yes, sir.
So how much security is available now?
27.
27. So this is the secured amount. 27 security available. Okay. Is it okay or not?
Yes, sir.
So you minus this one. How much is unsecured now? 80 or not?
80, sir.
Out of this, 74.90 is the ECC claim, for which provision will be not be made. So you minus this one, whether you are getting 5.10 or not.
Yes, sir.
Yes, sir. 5.1 we will be getting.
So secured person, how much? 40%. Unsecured person, 100%. 27, 40% comes to 10.80, and this 100% 5.10. So 15.90. This is the answer. Okay. We have exceeded by 5 minutes. So the last question, this one we'll do, and then we'll. This is a mixture of your balance sheet management and risk management together. Now the question will be asking, see, all these things are given here. Normally, some standard asset and some NPS have been given. Other assets are given, fixed asset are given, investment are given. So those are the things given. Now the question is asking, find the risk weight asset for substandard assets. In this substandard means balance sheet management NPA. For NPA, what will be the risk weight asset? How you have to find out? Here you have to recollect what we have been told in the risk management case. What is the risk weight applicable for NPS? Can somebody tell me what is the
provision for
Okay. So that three formulas. If provision is less than 20%, risk weight is 150. If it is more than 20 to 50%, it is 100. If it is more than 50, it is 50%. Okay. That we have to take into consideration. Now, substandard asset. Substandard asset here it is given 1,500. So substandard secured, what is the percentage? 15%. Provision 14%. Unsecured is
25%.
25%. So if that is so, that means the risk weight will be how much for this?
50%.
This will be 150%. So risk weight asset 1500, right? And this is 25% means this will be 100%. So 500. So together it is 2000. So risk weight asset for substandard asset is 2000. Clear?
Can you repeat that risk weight percentage? That 150, 150, that condition?
Less than 20% provision. Risk rate is 150%.
If the provision is less than 20%, risk weight is 150%. If it is, sorry, this is less than. If it is more than 20 but less than 50, then risk weight is 100%. If it is more than 50, this is 50%. This we have learned in the risk management class. You cannot forget this. These are three. So here, substandard secured 15%. 15% means it is falling on the 150%. So that's why 150% you have taken. Exposure multiplied by risk weight equal to, this is the RWA. Here it is 25% means it is falling under 100%. So 100 means 500 into 100 is 500. Together 2000. Okay? Now calculate this. What is the RWA for D1 unsecured asset? D1 unsecured, only this one.
So 300.
300.
600.
D1.
600. 600.
300.
300.
Answer is 300. Answer is 300.
Provision is 100%. So risk will be 50%.
50% of that, which is
so
100.
it is 300. Okay. Next question is D2 total D2 assets. Both together. D2 secured is 40%.
40.
Unsecured is 100%. So 40 means it is
500.
100%. And this is
50.
So
500
500
plus 100, 1000.
and 5000. So this will become 1000. Okay. Next one. What is the RWA for D3 asset? Both are 100%.
Both are 100.
Into
50% of
800.
600.
800.
800. Okay. Now, next question. What is the RWA for standard retail loans?
25%.
75%.
So
75%.
all these are applicable for NPA, those things. Now this is a standard asset. So standard asset means 75%. So 75% of 4,000. Standard retail 4,000. So
3,000.
3,000. What is the RWA for standard housing loan?
0.25%.
0.25%.
If it is below 30 lakhs, 50%. If it is above 30 lakhs, 100%.
So
35%.
Below 30 lakh, LTV is less than 80.
35%.
35%.
Okay, very good. So 35%. So 6,000 into 35% equal to how much? 2,100.
100.
Okay. Now you can ask your doubt because I don't have more time. It's already closed.
Standard housing loan. Last one. Can you tell the last
Sir,
question?
morning class problems you can share in WhatsApp now, sir, please. 11
What
to 1.
morning class?
11 to 1 risk management problems were you discussed on us.
Sir,
Only
PPT.
PPT. Okay,
Yes,
I'll
sir.
share.
We
But
were
there
in
is
the
no answer. There is no answer only because we are doing in the screen itself. Only questions will be there. No solution is there because I am doing in this online. The
questions will be shared, sir.
Sir, questions at least you share, sir. Please.
Okay.
Sir, for housing loan, is that not 25%?
Which one?
RWA for standard housing loan.
Huh?
Is that not 25%, sir? You said it
No,
is
no, no.
35%.
There is no 25% is there. 35. It starts with 35 only. 35, 50, 75. 3 are there. There is no 25%. Housing loan, there is no 25%.
For which one, sir?
Huh?
For retail loans, it is 75. 50 for which one?
Greater than 30 lakh.
Housing loan, there are 3 things are there. 35%, 50% and 75%. 3 things are there. Where below 30 lakh, when LTV is less than 80%, then it is 35. Below 30 lakh, if it is up to 90%, then it is 50. Then above 30 lakh, that chart is given in the class. I just could not remember. So above 30 lakh, it is less than 90, it will be 50. And above 75 lakhs, if the LTV is less than 80, it is 50. Other things 75. So there are 3 risk weight for housing loans. Housing loans, there are 3 things. A retail standard loan, it is only 1. Okay.
Okay, sir. Thank you.
Sir, here 43 question. D2 assets are secured and unsecured, no sir. So we have to, for unsecured portion is 150. For secured portion, we will get
D2
50, sir.
D2 is 40% for the secured, 100% is unsecured provision. Yes or no?
Oh, yes, sir. Yes, sir.
So a risk weight will be how much? 40 means it is 100%. 100% means it is 50%. Risk weight is 50% here.
Okay, sir.
Okay, all the best for the examination.
Doubt I have to get clear, sir. Asset should be in DA2 category for 2 years or 3 years, sir.
D2 category.
DA2 category.
D1 remains for 1 year.
1 year.
D2 category, it will be for 2
1
years.
to 3.
1 to 3 years is
More than 1.
More than 1 year up to 3 years means 24 months, 2 years only.
Up to 2
2
years.
years only, no?
So D3 is here together 3. So when it is more than 3 years, it becomes 3.
Sir, in some classes, it is set like a DA2 category. The asset should be in 3 years for DA2 category. Like that in one class it is set, sir. That is why I'm asking.
Which class? I have told.
No, sir, not in your class. In some other sir's class, it is set like in DA2 category, asset should be for 3 years. 1 to 3 year means it should be 3 years. Like that he told us, sir.
Substandard 1 year.
1 year.
Okay. After 1 year completed, immediately it will come to DF1. DF1, it will stay for 1 year.
1 year.
Okay. DF2, what is given more than 1 year up to 3 years. That means what?
2 years.
More than 1 year. So means after 1 year completion year, it will come to DF2. So it means, so second and third year it will be there. So there are 2 years in DF2. Then in these 2 together, 2 plus 1, 3 years in doubtful, it becomes more than 3. So more than 3 years, it becomes doubtful
3. Okay.
And there is no maximum thing. As long as security is available, it can remain for 5 years, 7 years, 10 years, whatever it may be.
Okay,
unless
sir.
it is classified as loss.
Okay, sir.
Sir, one last question. I sent one problem in group, sir. May I read that one?
Yeah, tell me.
It is as on 31st March 2020, the outstanding Forex open position of a bank is 400 crores.
Forex thing, why you are asking me? I am
Sir,
not taking
this
Forex
is belonging to Basel 2, sir. RBI Basel 2, sir.
What is the question? Okay.
Okay, 400 crores is, whereas the limit set for this position is 500.
Okay.
What is the applicable capital charge for this position as per RBI Basel 2 standardized duration approach?
So standardized duration approach is market risk.
Sir.
Market risk. So market risk, any other thing has been given?
Nothing, sir. Only 400 and 500 is given, sir.
How it will be possible? Market risk means we have to have standard deviation and yield rate. Duration has to be there. Duration of that thing and what is the yield rate? Assumed yield rate. If these two things are not there, here we have the exposure. So that has to be there. Otherwise, how to calculate? The question is incomplete. Market risk capital, how to calculate? You cannot calculate. This much of information is not complete, na? You have to have full information. To calculate the capital, you have to have the duration of the value, duration of the investment, as well as what is the assumed yield change rate. Two more things are required. Otherwise, it cannot be answered.
Sir, revaluation reserve, sir, we have to add CET1.
Yes, it is 55% discount in CET1. Okay.
Sir, revaluation reserves, sir, added to Tier 2 capital or CET capital, sir?
Tier 1 capital, CET1.
CET1. Tell me, sir.
In my risk management PPT, it is clearly, see in the Macmillan book also, it is clear elements of capital has been given. It is clearly written where this revaluation reserve to be taken. You read that thing today, now only you read. In the Macmillan book, it has been given elements of capital, element of capital for CET1, elements of capital for additional Tier 1, element capital of a Tier 2. It is clearly mentioned that revaluation reserve goes to CET1 at 55% discount. It is mentioned there. Because in Basel 2, it was in Tier 2. Now it is come to
Yes, sir. Sometimes
Clauses were calculating.
Huh?
Some problems are coming to it is Tier 2, sir. There are some more calculation.
No, you cannot do that in Tier 2. It is now for the last 3 years, more than 3 years, it is in Tier 1. So there might be something which has been not edited in the book. So those questions are very old questions. So do not follow that. Basel 3, it is not Tier 2. It is revaluation reserve in the Tier 1 only.
Sir, in the problem, they are giving the Basel 3, it takes at 11.5%, sir.
No, they will give. No, they will clearly mention that CAR is 9%, CCB is 2.5%. Then you take that as 11.25. With CCB, you have to take 11.5. If it is CCB is not given, then only 9%.
Sir, CET1 we will calculate, no, sir. Tier 1 and Tier 2. Tier 2 will be calculate 2% of risk-weighted assets, no, sir, irrespective of anything they are given.
It is always 5.5, 1.5, and 2. That's all. Of risk-weighted assets.
Irrespective of they are anything they are given, sir. We have to take this only.
Anything means what?
Sometimes they are giving more values, sir.
More value means what?
Means 5.5 risk-weighted assets. They are giving, if we added, no, sir, they will be giving the more value.
More value means what? I don't understand. More value means what? What is more value?
Why we, one problem is there, sir.
No. What is more value? What is the more value? I don't understand. 5.5% of what? These we are calculating of what?
Risk-weighted assets, sir.
Risk-weighted assets. So they will be giving risk-weighted assets.
Sir, some subordinate bonds they are giving, and some are given.
So in that case, why you are taking about this 5.5 and 1.5 in that case? If those 700 days and other elements are given, then you have to bifurcate which are falling under CET1 and 81 and Tier 2. In that case, this percentage doesn't come.
Okay. So
This
elements we have to
percentage-
take, sir, that time?
Yes, elements you have to know which goes to CET1, which goes to 81 and which goes to Tier 2. That way you have to bifurcate, and that in that time this percentage doesn't work. Because already
sir,
you are
yes, sir.
having that capital. Now, why this percentage will come into place?
Okay. ठीक है, sir. Clear.
Sir, in provisions, sir.
Provisions?
Sir?
No, yeah, in
Sir, in
provisions.
provisions, we are calculating, comes under in Tier 2 na, while calculating, considering the provision means 1.25 into RW.
Not provisions. That is provision on standard assets. Provisions on standard asset, not NPA. NPA provision does not come under capital. Only provision on standard asset will come. That too with a cap. That is 1.25% of credit risk weight asset. Earlier it was total risk weight asset. Now in Basel III it is credit risk weight asset only. So you have to take 1.25% of the credit risk weight asset or this one, whichever is lower.
Okay. Thank you, sir.
Thank you, sir.
Sir, one doubt about morning class. Time, sir?
Yeah, tell me. It is already 10 o'clock. You tell me.
Sir, it is regarding BPV, sir.
BPV, what is
the first question, sir? Morning session, first question. Sir, I only understand the BP value. The change in price divided by change in yield will get BP value, sir. Is it right, sir?
BPV means what is the change in the price due to change in the yield rate by 1 BPS. BPV equal to change in the price due to change in the yield rate. That change is if 1 BPS change in the yield rate, what is the change in price? That is the BPV. Still you are confused? What is BPS? You tell me. 1 BPS is equal to what? How many percentage? 1 BPS is equal to what is the percentage? If you do not know 1 BPS what percentage, then how can you understand it? Today you are telling that 1 BPS means
10%.
10%. 1 BPS is equal to 10%.
1%.
1 BPS is equal to 1 by 100.
0.01. 1 by 100.
0.01% is equal to 1 BPS. 1 BPS is equal to 0.01%. Okay. So for 0.01% change, what is the price change? That is the BP. So we have calculated that price was 92 rupees, which has come to 92.50. So price change is 50 paisa. And this has become 50 paisa. This has increased because earlier it was 10% or something 9%. It has become 9. Say, I think difference was 0. So 9.90, say 10% or something like that. Or it was earlier 10%. Now it has become 9.90. So 10%.
Sir, 10 and 9.9. 10
and
9.9, sir.
So because this change was 0.10%, the price change is 0.50. Right? This was the thing.
Sir.
Now, this is the question. Now, BPV means we have to find what is the change per 0.1%. So how we'll get it? Simply this divided by this multiplied with this. So this divided by 0.10 multiplied by 0.1. You do it, so you will get 0.05. So this is the BPV. This 0.10 means simply this is 10 BPS. If 0.10 is 1 BPS, so 0.10 is 10 BPS. For 10 BPS, change is 50 paisa. For 1 BPS, 50 divided by 10 equal to 0.5 paisa. This is the BPV. Clear or not?
Yes, sir. Yes, sir. Yes, sir.
Okay. Okay. Okay, good night.
Thank you, sir. Good night, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir. Thank you very much, sir.
Welcome. All the best.